Good morning and welcome. We're at the start of all the festive cheer that's about to come through for us going forward over the next month or so. But let's firstly wishing you all a very good morning and a very happy Dasera from Snehi, myself, and the entire team. So we'll start off. Market Cafe is the name of the show. I'm Harsaita, with me Snehi Shah. In this show, we take you through all that's happening in global markets, as well as give you a quick catch up on what's happening domestically, both on the macro as well as on the corporate front. So let's start off first with the global markets. Snehi, it's been a topsy-turvy week for global markets.
Absolutely.
We started Monday in the red, but and we ended Friday actually well in the red. How is it looking now? It's Wednesday. It's a truncated week for Indian indices.
Absolutely, but while we were away, Harsh, the US markets have managed to slip into the green. So some positivity, while we were away, and we're seeing some respite in the US markets now, because the markets had slipped a little on Monday, and now Wall Street has managed to close in the green as investors have digested quarterly results from tech giants Microsoft as well as Alphabet. The major averages all notched gains in the main trading session on the back of several strong corporate earnings reports. The Dow added more than 200 points, so 0.6% uptick coming in for Dow, and Dow has broken a 4-day losing streak as well. The S&P 500 gained 0.7%. Nasdaq was also up close to 1% in trade. So while we can see green all across Wall Street, now traders will be keeping an eye on several more key quarterly reports during one of the busiest weeks of earnings for Wall Street. Boeing will be posting its quarterly results on Wednesday before the bell, followed by IBM and Meta in the afternoon. So some big companies reporting big numbers today. So important cues to keep your eye out on. Also, some cool off on the bonds was seen on the bonds front. US Treasury yields were steady on Tuesday after slipping back below that 5% mark, though they are close to their 16-year highs as of now as well. The yields on the benchmark 10-year Treasury note fell 1.5 bips to 4.82%. The 10-year had, remember, climbed above 5% on Monday, having crossed that symbolic threshold last week for the first time since 2007 before retreating over the course of this session. So this is what US markets are largely looking like, a sea of green across the US markets, and some cool off seen on the 10-year bond yield as well. Shifting focus to European markets then, European markets have snapped a 5-session losing streak on Tuesday as investors digested the latest Eurozone business activity data. The Pan-European Stock 600 index provisionally closed 0.4% higher after a choppy session, with most sectors and major bosses in the positive territory. Now, preliminary purchasing managers index data, that's the PMI data for the Eurozone for October, showed an unexpected dip, heightening fears of a recession. On the back of this, DAX was up 0.5%, FTSE was also up 0.2%. So largely you're seeing positive cues coming in from US as well as Europe, Harsh. So positive global cues, let's see how that pans out for us. But while this was on the equity front, Harsh, take us through what oil and other commodities have done.
Well, yes, let's start off with oil, because very interesting move coming in for oil, Snehi, and what we're seeing therefore is third straight day of decline for oil. What we're seeing on the WTI is it's declined to below $84 a barrel. So the flip-flop in this particular market seems to continue, especially for crude. Brent, what we're seeing is just above the $88 a barrel mark. And largely it's because the Eurozone business activity seems to have taken oil markets by a bit of a surprise. So therefore, what we're seeing is a bit of a retreat on that front. Eurozone activity being weak will obviously mean demand will remain slightly more compressed, which will mean that oil prices ought to fall a little bit on the back of that demand compression, and that's what's really playing out as we speak. Let's also have a quick check on gold, because interesting move coming in from gold over the last couple of weeks as well. Alternative assets have done fairly well as bond yields have started to go up. What we're seeing on the US 10-year is even that has retreated quite sharply from that 5+% mark. It's at 4.8%. And what we're seeing on gold, therefore, is a slight uptick, but largely flat versus yesterday. But a slight uptick nonetheless from the start of this week. We're seeing gold at $1985 an ounce. Little unchanged as the Middle East conflict continues to play out. US economic data, not much in this week, so we're not going to see much of that. But we're seeing a lot of US corporate action coming in. A lot of earnings coming through in the US, which is keeping markets buoyant, but gold may not truly benefit from that, Sneha.
Absolutely, Harsh. On the back of that, we'll see what happens with gold as we advance in the week. But these are all the cues that you should be keeping your eye out on in today's trading session. And let's start by looking at the nifty earnings today. We've got Tech Mahindra as well as Axis Bank that will be reporting their Q2 numbers today. On the corporate action front, then you've got the board of Sonata Software. They will be meeting to mull issue of bonus shares. Tech Mahindra's board will be meeting to mull payment of interim dividend. And you've got Godrej Industries. They will be meeting to mull amendment of unsecured non-convertible debentures. So, well, all of these stocks will be in focus today as well. When it comes to lock-in periods, then lock-in is going to open for two companies. You've got 5% equity lock-in opening for Sai Silks, 8% equity lock-in opening for Yatra Online as well. When it comes to the primary markets, then in the IPO action, today the Blue Jet Healthcare subscription will open. So that's the IPO that will open for subscription today. It will stay open till the 27th of October. So these are all the important cues that you need to keep your eye out on in today's trading session.
Absolutely, cues to keep an eye out as well. But let's quickly move on to global news, geopolitics. It's been 19 days since the start of the war in Gaza on the 7th of October. That was the start date. Let's get you the latest on that one. Israeli Defense Forces, the IDF, has said it carried out strikes at more than 400 targets over the past 24 hours. Over 140 people have lost their lives in the Israeli airstrikes overnight. Meanwhile, the United Nations Agency for Palestinian Refugees has warned it will stop working across the Gaza Strip until urgent fuel deliveries were made to the war-hit region. The hospitals in the area also face a potential shutdown due to acute shortages. The October 7th attack did not happen in a vacuum, says the United Nations General Secretary, followed by Israel demanding his resignation. The air attack in Jenin has now been confirmed by the Israeli authorities. According to reports, at least one civilian life is lost in the Jenin clashes, while injured have been rushed to the hospital. The death toll continues to mount. Over 700 Palestinians have been killed in the war, majority being women and children, and that's taken the total number to 5,700.
Well, that's some unfortunate update coming in from Israel, but let's look at the economic impact of this war then. And the S&P has gone ahead and cut their ratings forecast for Israel to AA-. They now forecast the economy to shrink by 5% in the fourth quarter amid business and security disruptions. The halt of tourism and a broader confidence shock could in fact hurt economic growth before a rebound is seen in 2024.
Right, and shifting focus to tech giants on the back of earnings. Alphabet reported a beat on revenue and EPS estimates in Q3. Poor show on the cloud business though, surprisingly, and that sent the stock on a downward spiral despite the overall beat. Meanwhile, Microsoft soared on higher than expected revenue guidance. The firm also reported a surge in profit due to a slower pace of operating expense growth.
And well, JP Morgan chief Jamie Dimon flags risks to the economy, criticizing central banks' forecasts for major miscalculations. He downplayed the importance of further rate hikes, suggesting an additional rise of 25 bips or more would have little impact on the economy.
Right, with those warning words of Jamie Dimon, let's slip into a very short break. More on the other side. We'll start to go domestic.
Hi there, welcome back. You're watching Market Cafe and this is ET Now. This is that part of the show where we'll take stock of how the Asian markets have opened up. So let's go across and see what Asian Pacific markets are doing. They're largely mixed as investors are assessing Australia's third quarter inflation figures, which will give clues to the Reserve Bank of Australia's monetary policy decision when it meets on the 3rd of November. Now, Australia's third quarter inflation rate came in at 5.4%, slightly higher than what was expected to come in at 5.3% by economists. economists that was polled by Reuters, but lower than that 6% that was seen in the previous quarter. On the back of that, you can see Australia's index ASX 200 very flat, not doing much, down almost 0.3%, down 20 points, not doing much as well. Let's shift focus and talk about Nikkei, because that's where all the action is happening, and Nikkei is up in the green. As you can see, 1.1% uptick coming in for Nikkei, so well positivity when it comes to Japan. Also shifting focus, then let's look at Hang Seng as well as Shanghai. Hang Seng also up 2%. 360 points uptick coming in for Hang Seng as well, so well positivity when you see there as well. Shanghai also in the green, 0.8% uptick coming in when we look at Shanghai. On the other hand though, Kospi is an index that started very close to the flat line. It's still down 0.3%, so Kospi not doing much. When we look at Nifty, where we closed on Monday, we closed just below those 19,300 levels. So let's see what the implied opening is looking for today on the back of a lot of cues that we've been getting globally. Implied open at 19,306, so rather muted start implied for us this morning. US futures are mixed. US markets, we've seen a positive close. US VIX has also cooled off, down 6.8%, around that 18.9 mark, and we've also seen a cool off in the 10-year bond yield. So well, let's see how this pans out for our markets this morning, Harsh.
Well, yes, absolutely, and a very interesting piece still on the global side, and I'll stick to that. A couple of things that are playing out. One is we've seen Bill Ackman was in fact, who's the famous investor in the US, was short the US bonds. So what he was suggesting was that there was still some uptick with regard to the 10-year bond yield, which he expected. He's covered those shorts at the start of this week. So what we're hearing, or what he's tweeted about, is how there is way too much risk, and therefore he does not expect bond markets or the bond yields to rally further. And that's really been one of the reasons why bond yields have actually retreated from that 5% to the 4.8% mark. And that makes all the difference, right? You've seen a 20 bip fall in the bond yield. Also, what we're seeing is with regard to crypto has actually rallied. We've seen Bitcoin go up by over 100% this year now, and that is the other asset class which will be in focus. So what we've seen from Bitcoin is Bitcoin breached the $35,000 mark, and it's actually fallen to around 34, holding up very smartly there. There's some short covering actually which is seeming to happen there. There's a short squeeze which is happening there. So that's also one very interesting play that's happening. So those couple of asset classes also in focus. But let me quickly take it to what we have lined up for you today with regard to our show, The Market. We have Ravi Dharamshi from Value Quest Investment Advisors at 9:20 to talk to us about markets, of course. Then we have Girish Kausgi, who's going to talk to us about PNB Housing Finance's numbers. That NBFC will obviously talk to us about what's shaping up with regard to housing trends in India as well. And lastly, we have K. Srinivasan, who's the MD at Kirloskar Pneumatic. He will also talk to us about earnings. Right, welcome back. Thanks for staying with us. Let's quickly move on. In India, domestic specific news, Byju's CFO Ajay Goel has resigned, returning to Vedanta as the CFO. Mind you, Byju's, which is India's most valued startup, has been under fire since the start of 2022 for a range of issues, including accounting irregularities, alleged mis-selling of courses, and mass layoffs. My colleague Anurag Joshi is standing by with all of the details on what's happening there. Anurag, host of troubles brewing, but tell us more about what's happening here.
Yes, Ajay Goel, who had joined Byju's in April as the CFO of the company, has returned back to Vedanta. Now, Ajay Goel had quit Vedanta in April to join Byju's as CFO. Due to Ajay Goel's departure from Byju's, the EdTech giant has announced leadership changes in its finance function. So Pradeep Kanakia will be the senior advisor, and Nitin Gulani will be the president for finance, with the additional responsibility of the India CFO function. Now Ajay Goel is going to fill in the shoes for Sonal Srivastava at Vedanta, who has put in her papers at the mining major. And this just comes amid the delay at Byju's in declaring its financial results for the financial year to March 2022, which has been much anticipated by investors, and this has been delayed. And the company was earlier hoping to declare the results by early October, but that process has now been delayed. But what the company has said is that Ajay Goel is going to be around to complete the formalities for the FY22 audit.
All right, Anurag, thanks for all of those details of the troubles that are brewing at Byju's. Let's shift gears to earnings. And online market platform Flipkart has lost 4,900 crore rupees on an annualized basis. Standalone net loss has expanded in FY23, and my colleague Aishwarya Patil has more details on this. Aishwarya, not a strong set for Flipkart, but help us chalk out the numbers.
Well, after celebrating the Big Billion Day earlier this month, agencies have reported that the losses of Flipkart have widened to over 4,800 crore rupees. Now, the agency says that Walmart-owned e-commerce company has posted a consolidated loss of 3,371 crore rupees in the financial year FY22. On a standalone basis, Flipkart's net loss that was carried to the balance sheet, that widened to 4,839 crore rupees. And during the reported fiscal, the company's net total income, including income from other sources, that increased by 9.4% to almost 56,000 crore rupees from 51,176 crore rupees in FY22. When we talk about the expenses, the total expenses that the company incurred was reported at almost 60,000 crore rupees overall. So that's a roundup for you of the earnings of Flipkart that was reported by one of the agencies.
Right, thanks for that, Aishwarya. But from one set of earnings to another, IT giant Tech Mahindra all set to report its Q2 numbers this week. Let's go across to Anisha. Decode that or decode all the expectations, Anisha. What is the street really penciling in?
Well, Tech Mahindra has been disappointing us for the last few quarters, and this time is going to be no different. We are actually preparing ourselves for a slide of almost 1% when it comes to constant currency, and it could be deeper when it comes to the US revenue as well. Margins too might look very bleak. Remember, from those levels of almost 13-14%, the margins have already fallen to around 6%, and this time we are expecting a further worsening of margins on a sequential basis because some one-off costs might come in, and that's the reason we are expecting a level of 5.5%, and consequently the profits will be close to 600 to 700 crore rupees. Within the various segments, you need to watch out for what's happening with telecom and communication, because that has been one vertical which has been a bit of a pain point for the company. Deal wins are expected to be pretty much steady. We are working with a number of around $500 million. Headcount is the other important thing to watch out for. It's been declining for the last 3 quarters, and this quarter is going to be no different. We might see a headcount decline coming in for Tech Mahindra again. The management commentary will be very important because it's going to be the new CEO at the helm going forward. So if there is that reorganization which is announced, it will be important to track when is the timeline that they're talking about a recovery, as well as what happens to the margins going forward. Will they worsen before it gets better, because Q3 is seasonally weak? All of that is something that we'll watch out for. So let's wait by and see what the company delivers.
Right, Tech Mahindra expected today, also Axis Bank expected today, Q2 numbers expected from Axis Bank, and we're expecting net interest income to be at around the 12,000 crore mark. Of course, NIMs in focus this time around. The 12,000 crore number for NII, 16% growth is what is expected. When we're looking at operating profit, is expected up roughly 11% year over year. 8,600 odd crore is where the operating profit is expected to land at. Of course, operating expenses will also be in focus this time around. You're seeing provisioning, which is in the decline, will continue to remain in the decline, is what is expected by the street. Credit costs are expected to remain benign. 800 crore is where the provisions number is expected to come in at, which is a 23% decline on a sequential basis. Profit after tax expected at 5,800 crore, absolutely rather up around 9% year over year, absolutely flat on a sequential basis. Gross NPAs, net NPAs expected flat. The net NPA is at 0.4%, already at a low. We're expecting advances growth to come in at roughly 4% sequentially, deposit growth to match that. Of course, that is another key factor which one will have to look out for when it comes to the numbers itself, as well as management commentary on where deposits or where do they see deposit growth going forward. And of course, growth from the Citi acquisition, all of the expectations that were there, how is the management really coping with that, is the other thing which will be in focus. So margins, Citi acquisition, deposit growth, as well as how loan growth will really shape up. That's all that is expected from Axis, and we of course have three top guests with us on the channel. Stay tuned. We have Amitabh Chaudhary as well as Rajiv Anand, and we also have Puneet Sharma.
Alright, so Axis Bank will be in focus on the back of the expectations of its Q2 numbers, but agrochemical stocks could also be in focus after American major FMC has cut its guidance once again, citing a challenging environment, expecting the pressure to persist in the near to medium term. Somit is joining in to get us all the details. Somit, take us through what this management guidance is and all the stocks that will be impacted on our market as well.
Well, FMC has yet again given a revenue warning. Now, this is for the second consecutive quarter where they have downgraded their revenue and adjusted EBITDA guidance for 2023. Now, for in the previous quarter, they had downgraded by around 14%. There was a revenue cut, and around 12% cut was seen on the adjusted EBITDA front. And this time, they have cut their revenue by around 13%, while the adjusted EBITDA has been cut by around 26% for the calendar year 2023. Moreover, the management has also said that they are seeing significant pressure when it comes to agrochemicals in the near to medium term, and they're expecting the destocking conditions to persist even in the next calendar year, that is 2024. Now, they're observed that the channel destocking is continuing in all regions and they're also saying that the magnitude of destocking that they're seeing in Brazil has been much greater than what they were anticipating earlier. Now, they're also saying that the application of the products are pretty much stable from the growers, but it is the destocking that is going to impact them even in the next calendar year, that is 2024. And they're also initiating immediate restructuring process for operations in Brazil because they need to contain their cost, and because of higher cost, in fact, if you're seeing that adjusted EBITDA has been downgraded by 26%, and now the company is trying to contain this cost going forward. Now, because of this lower revenue guidance, and given the fact that they're also expecting lower revenue for 2024, the companies that would get impacted in the Indian market, firstly it's UPIL, because it's also an agrochemical producer and exporter. Apart from that, there are a host of chemical companies that would remain in focus, like SRF, Aztec Life, Anupam Rasayan, Jubilant Ingrevia, and Navin Fluorine. Now, all these companies are exposed to agrochemical cycle as they supply to leading agrochemical companies like FMC, Syngenta, Edama, Bayer, Corteva, and BASF. And all these companies could also see significant pressure in their earnings going forward.
Right, thanks for that, Somit. But stay with us. We're talking about FIIs. Those are in focus. They've been selling the most during the first 15 days of October, with the figure standing at $1.2 billion US. Which were the sectors that's really witnessing outflows? Talk to us about those, Somit.
Well, if you see the FI outflow number for the first 15 days of the month of October stood at close to $1.2 billion US, and this is the third consecutive fortnight of outflows that we have been seeing. Now, the total flow for 2023 is now reduced to around $13.4 billion US. Now, the largest outflow was seen in sectors like utilities, followed by capital goods. Among the sectors that have seen an outflow of more than $100 million US in the first 15 days of October, FMCG and financial, if you see, these are the two sectors that have been seeing outflows for the fifth consecutive fortnight. Now, capital goods sector, which witnessed an outflow for the first time since June 2022, and this first outflow was seen in the previous fortnight, that is for the last 15 days for the month of September. Similarly, this is again we are seeing an outflow in capital goods sector, and this is for the second consecutive quarter that we this is for the second consecutive fortnight that we are seeing an outflow for the first time since June 2022. Now, on the inflow side, it was the telecommunications sector which has seen a significant amount of inflow. Apart from that, there was commercial and professional services that also saw a second consecutive fortnight of inflows. Now, on the outflow side, again after 5 fortnights of inflows. Software and services sector witnessed an outflow. Nifty IT index was also down around 2% during that same time period. Now, small outflows are also seen in sectors like healthcare, media, material, automobile and auto ancillaries, but the range was around 17 to 47 million US dollars. And now these sectors are and pretty much that is how the FI flows have been for the first 15 days for the month of October.
All right, Swami, thanks so much for breaking that down for us and taking us through that. It's time to slip into a very short break. We'll be right back. Stay tuned. Hi there, welcome back. Still watching Market Cafe. This is ET Now. Let's move on and put a spotlight on how the credit card spends for the month of September look like. Ashesha is here with all of those details. Ashesha, take us through those numbers. Well, yes, in fact, credit card spends saw a decline in the month of September. Credit card spends in the month of September declined by about 4.2% on a month-on-month basis after a growth of 2.7% that we had seen in the month of August. Let's also talk about credit card additions then in the month of September. That was strong on a month-on-month basis. Credit card additions, or rather new card additions, stood at 17.4 lakh in the month of September as against 14.1 lakh that we had seen in the month of August. So credit card additions in the month of September have seen a strong growth on a month-on-month basis. New card additions on a month-on-month basis was supported by strong growth across all players. New card addition was slowest for SBI card amongst all private as well as public sector insurance players that we saw. Credit card addition for ICICI Bank saw a growth of 2.3% on a month-on-month basis, which was followed by IndusInd Bank at 2% and RBL Bank at about 1.9%. Let's also talk about market share position in the month gone by, where HDFC Bank and IndusInd Bank gained market share in terms of credit card spends in the month of September, while SBI, Axis Bank and ICICI Bank lost market share on a month-on-month basis. Let's also talk about some figures then. HDFC Bank market share stood at about 26.5% in the month of August, and it improved further to about 27.2% in the month of September. This was followed by SBI, where market share stood at 18.4% in the month of August, but it deteriorated to 17.5%. So credit card spending on a month-on-month basis did decline, but new card additions were strong on a month-on-month basis, and this was across players.
So much for that, Ashesha. Of course, SBI card will be in focus after there's been a bit of a shrink with regard to the market share as well as card additions growing not as quickly as expected. Let's quickly move on though. Ansh is here with us in the studio to talk to us about all the levels to watch out for today. Ansh, talk to us about those levels. We've breached 19,300 now. What should we expect?
Sure. So not only 19,300, but if you see the chart, we have breached 100-day moving average as well. However, there seems to be a good support around 19,200 as per the downward sloping support trend line that we have drawn on the chart, as you can see as well. Now let's see what happened in F&O segment. Long unwinding was seen in Nifty futures with open interest dropping by around 16%. This indicates that bulls are totally exiting their long positions. Whereas on option front, we saw very active call writing at 19,500, indicating strong resistance around this level. Let's shift our focus to what FIS did. On option front, we are seeing call longs getting added by 2.8 lakh contracts and call shorts are also getting added by around 3.8 lakh contracts. This means that traders are expecting limited pullback in the market. So in a nutshell, if we join all the pieces together, there's limited pullback expectation in the market despite of yesterday's sell-off. 19,200 can act as a good support as per the support trend line that we have seen on the chart, and 19,500 has the highest open interest, which could act as a strong resistance. So 19,200 to 19,500 could be the range for coming 2-3 sessions.
Absolutely, Anshan. Tomorrow is also the monthly F&O expiry. So, well, that's another indicator to watch out for as well.
Yes.
But with that, also take us through a list of all the stocks that could be potential buzzers in today's trading session.
So Lupin will be the first stock in focus for today's trading session, as company has got an approval from US FDA for fluconazole tablets. This tablet had an estimated annual sales of around $43 million in the United States. Now let's take a look over a few earnings as well. NR Agarwal Industries has recorded notable decrease in revenue, down by around 32.3% compared to previous year. Company's EBITDA reaches 47 crore, reflecting a decrease of 12%. However, net profit show an increase reaching to 38 crore, up by 37-38%. PNB Housing Finance reported positive results with increase in revenue to 1,778 crore, showing a growth of around 5.5% on year-on-year basis. Profit after tax shows substantial increase of 46%. Mahindra Logistics records a year-on-year increase in revenue, reaching 1,365 crore, showing a growth of around 3%. However, EBITDA is down by 20.7%, which explains the bottom line actually. Company has reported a net loss of 15.5 crore against previous year's profit of 12.2 crore. Cable Kiran Clothing has also reported its earnings. We are seeing an increase in revenue, with total revenue reaching by around 262 crore, reflecting a growth of 16%. Profit after tax also show positive results, which is up by 27% on year-on-year basis. Lastly, Torrent Pharma records revenue, which is up by 16%. Profit after tax stands at 386 crore, reflecting an increase of 24% on year-on-year basis. If we see country-wise breakup, then India revenue has grown by 18%, Brazil revenue is up by 36%, and Germany revenue is up by 21%. But US revenue has decreased by 15%. So keep an eye on the stocks.
Right, Ansh, thank you so much for that. We'll keep an eye on all of those. But very quickly moving on, Vamakshi has been going through all the brokerage notes that have come through over yesterday and today. Vamakshi, talk to us about the key ones there.
Well, yes, let me first start off with Ugro Capital. This stock is in focus on the back of a note that has come in from MK, and they have highlighted that the business model of the company largely aligns around the evolving ecosystem as well as scale. They do have some enough system as well as processes in place that actually give the company comfort as far as asset quality is concerned. Not just that, co-lending with business partners is expected to be both mutually beneficial and also offers a big opportunity for Ugro Capital. They believe that strong AUM growth-led operating leverage is expected to increase the ROE, and not just that, 54% EPS CAGR is expected from FY24 to FY26. So given all of those factors, MK has gone ahead, initiated coverage on Ugro Capital with a buy rating, target price of 425 rupees per share. Moving on to Torrent Pharma, this stock is in focus on the back of a brokerage note that came in from Jefferies on the back of its Q2 numbers. Now, Q2 revenue as well as EBITDA was in line with the estimates, but the net profit came in higher on account of higher other income. Steady growth was observed in India. Brazil business saw a recovery, but the US sales were weak in the second quarter. Capital allocation going further is expected to be disciplined. The company did not comment on recent media reports around the acquisition of controlling stake in Cipla, but what Jefferies believes is that maximum leverage target might not be enough that was set by Torrent Pharma in order to acquire a controlling stake in Cipla. So all in all, Jefferies has maintained its hold rating on Torrent Pharma, but nevertheless hiked its target price to 2,040 rupees per share. HUL is another stock on our radar, and that is on the back of a brokerage note from HSBC. They believe that HUL has been a 5-year market laggard now, and this in part was mainly on account of unwinding of a significant past re-rating phase. Q2 was lackluster. Unless markets turn deeply risk averse, they see very little upside for HUL. So all in all, on the back of that, they've gone ahead and actually downgraded their rating on this counter from buy to hold, and also cut their target price to 2,700 rupees per share. And lastly, let's also focus in on Amber Enterprises. We have a note coming in from CLSA on its Q2 numbers, and they believe that Q2 margins were tepid, but the outlook for growth remains quite strong. Medium-term growth guidance for non-REC segments remains quite robust. The company's ability to ramp up in new segments would be key for would be a key re-rating trigger for Amber Enterprises. So given all of those factors, CLSA has gone ahead and maintained its buy rating and given a target price of 3,650 rupees per share.
Right, Vamakshi, thanks so much for taking us through that list. All of those stocks will be in focus on the back of those brokerage notes. But let's also talk about some action in the primary markets. And you've got the Blue Jet Health IPO opening today. Will be open till the 27th of this month. The size is 840 crore rupees. The entire issue is an offer for sale issue. Price band anywhere between 329 to 346 rupees per share. A little bit about the company. The company was incorporated in 1968, operates in the API as well as CDMO segments. It was the first maker of saccharin and its salt in India and expanded into contrast media intermediaries as well. Let's also take a look at the revenue mix of this company. 85% of their revenue comes from global operations, 15% of the revenue coming in from domestic operations. And lastly, let's also look at the high intensity sweetener clients when it comes to this company. The clients include marquee names like Colgate-Palmolive in India, Unilever, Pronova US, as well as MMAG company. So, well, this IPO will open for subscription today. Keep an eye out for this one.
Right, thank you so much for that quick take, Snehi. But we're completely out of time on this edition of the show. Let's quickly move to the market on the other side. From Snehi, myself, everyone who puts the show together, thanks so much for watching.